Be a great day. You know why? Because we've got a theme going on right now, and the short squeeze is that theme. We've got a stock for you that's absolutely getting squeezed today. We're going to be hitting that right here on the Rebel's Edge. Well, here we go once again. I'm Pete Najarian. I've got my brother with me, he's a brother from another mother. The great Mr. Marc LoPresti. Great to see you, Marc. As always, you are in great. You look fantastic. You got the shirt, you got the coat, the whole deal. You look comfortable. I tell you what, it's great to have you here. You know what? The heck with John. Who needs John? John, see you later.
Well, I'm not prepared. Those are big shoes to fill, both literally and figuratively. And yes, I'm wearing a shirt. I try to put one on almost every day, except when I'm in Puerto Rico with your brother. But we have so much to cover. Always excited and honored to address the incredible Market Rebellion Nation. Let's get in it.
Let's get after it. So we're going to start off with the macro minute, and it will be 1 minute because I only have a couple of seconds that I'm going to fill it up with, which is CPI. It's cooling. It's showing cooling. What does that mean? It means that the Fed is actually doing something right as long as they continue on the path that they have, and folks are looking for them to pause once again. It's about 99% right now, Mark, on the CME. So we know that that's going to be the reaction, but it comes afterwards on what Powell has to say. But what do you think about this CPI number?
Yeah, listen, this is precisely in line to the basis point with what the market was expecting, 3.1% year over year, 10 basis points to the upside. That's a 3 or 30 basis points, I should say, to the upside when you take out food and energy. But as you point out, Pete, that's that holiday season. Yes, folks, it's Fed Speak Eve, and I am preparing my Feast of the Seven Fed Governors dinner that is traditionally prepared before the last Fed Speak of the year. Yeah, I got to work on my humor, as my 15-year-old tells me. But yeah, look at the markets. Not a lot of creatures stirring today as the markets are anxiously awaiting what we expect to hear. Two things from Jay Powell over the next 2 days. One, no hike between now and the end of the year. Two, the job's not done, meaning we've probably got, as I've been saying, one more 25 basis point rate increase in the offing before we get around to cuts. Markets looking for a total of 100 basis points over the course of next year, commencing, as we said and continue to say, at the end of the second quarter. So that's our macro minute. It's all about the Fed. I can't wait for the macro minute to be about something other than the Fed, but that's not till next year.
We flip around on there once in a while, but that still has been the focus. It continues to be something of a huge influence on the markets. Next up, we've got the fantastic futures, Mark.
Fantastic futures.
This is the real deal, man. This is the real deal. Here's what I've got for you, and I think you and I are somewhere in the same ballpark once again, and it's about gold. And what I think is so interesting is October. We were just over 1,800 in the price of gold, right? In October, 1,834. Then December, we start off December. We hit 2,100 at the start of the month, right? Now we're below 2,000. It shows you, Mark, everything is changing a lot more and a lot more. I'll tell you what, the volatility of what we're seeing each and every day, the velocity of what we're seeing every day, that's occurring in oil. It's happening in gold. It's happening in all kinds of different commodities. I'll tell you what, I think gold right now has moved more so than I've ever seen it before, Mark. How about you?
Yeah, well, we look at some of these technicals, Pete, and yes, the velocity of these movements being one of the primary elements of our fantastic futures segment here right now. Of course, coming out of a death cross not too long ago, reaching or exceeding the GLD futures 2020 high. And now there's a golden cross in formation, which of course is where the short-term moving average climbs higher and more rapidly than the long-term moving average, which is a very bullish signal. But gold is traditionally an inflation hedge. It is, in fact, perhaps the inflation hedge of choice. But is inflation cooling? It's one of those things that we have such a mixed bag. And when I talk to economists about how to think about what's next year is going to look like, there is, I think, more uncertainty than there is certainty given all of these mixed signals. And this is not the least of them with gold and GLD.
Absolutely. You're spot on, Mark. It's amazing, really. All right, next we're going to jump into what's going on in the actual stock market, not just the big macro pictures and everything else and the fantastic futures. We're going to go right to Oracle. And by the way, earnings season continues on, folks. It's not like it suddenly just comes to an absolute stop. There's always earnings. And Oracle is the next one up. And when you take a look at what their numbers were, Mark, they missed on a few things. They missed on their revenue. Cloud growth definitely slowing. It's still strong, but it is slowing. Slowing is not a word people like to hear. They are hitting this stock today. It's down about 11%, anywhere between 9, 10, 11%. They're beating up on it. And I think a lot of that makes a little bit of sense, too. The second half of the year, they're talking about, hey, they're going to have to raise their CapEx. There's a lot of different things going on when you listen to this report. You dig into it pretty deep. Of all of these tech names, you went through the huge numbers of Apple and Microsoft and NVIDIA and all these other types of names. This name actually kind of stumbled here, and I thought it was pretty interesting to see this stumble. But what do you think, Mark? Is this an opportunity, or is this something where you go, I'm not going to touch this one for a while?
Well, listen, this is definitely one of those stocks that I think you have to have in your portfolio. I never bet against the growth of data. The comments from Oracle's CEO that we need to build another 100 more data centers. Man, if there isn't validation of that, don't bet against the growth of data that we talk about so frequently, I don't really know what is. The stock's up 41% on the year, Pete. So I think it was primed for a little bit of sell-off on disappointing news, on a miss like it had today with some cautious guidance. But I think what was most interesting for me as a data nerd and a data geek, as I like to proudly say, is you can't just say cloud up. Is it cloud services? Is it cloud infrastructure? And it was really getting into the weeds on some of those elements of the cloud side of Oracle's business that I think was most picked apart by analysts, and certainly the major part of this revenue report or this earnings report that I'm looking at. But I wouldn't bet against Oracle, and I might look to actually pick some up on this rather significant beatdown that's going on today.
Yeah, that's pretty interesting. One of the other things that stood out is it's not the customer demand, to your point, Mark. It's not about demand right now. A lot of it has to do with other elements that go into this whole thing. So I understand what you're saying, and I don't disagree. All right, Payoneer Global. I'm sure you've heard of this one many times in the past, Mark. You probably know this name backwards and forwards, but it's a financial tech company, and it's pretty interesting. They've actually grown, and they've done a pretty nice job. Their CFO is going to be a part of a fireside chat. And one of my read-throughs whenever I see news like this, Mark, and the stock is up, and that's the only news I see right now, but the stock is up maybe 4 or 5% today. So why is it up? Well, anytime you're willing to have your CFO, CEO, or somebody in that C-suite go out there and have the opportunity to have some discussions in front of the crowd, whether it's virtual or not, that tells you that they're pretty confident in things. And that gives you a little bit of that feeling of hope that there is some strength there. And I think that's something that's my read through. I don't see any other major news, Mark, that's really telling me, hey, this stock needs to go to the upside. But this interview that's going to be happening with William Blair, I think it's going to be interesting because he's obviously going to be well prepared, and it's going to be a very, very in-depth search of what this company is doing, how they're doing it, and how well they're doing it right now.
Well, Pete, I think your read is pretty spot on, and I'll even dig a little bit deeper. And this is an interesting company that's been on my radar. They're in the payments space. They're in the space of providing payments solutions, remittances, ways to pay and get paid for SMBs, small and medium-sized businesses, a sector that is often underserved or overlooked when it comes to the larger financial institutions. A lot of B2B, P2P, peer-to-peer, business-to-business payment solutions. I like the company, but when you see the stock move or a stock move on something like this, nothing more than the announcement of a interview or participation at a conference, and your brother and I go to a lot of these conferences. Why do the analysts come? Why are many of these conferences must attend for many of the street's biggest analysts? And that is because announcements are often made. A new product announcement, and a merger, something that has not been previously made public, is often made public at an event like this. And that is probably why I expect more than just rosy news. I actually expect the CEO to make some interesting statement, some interesting announcement, and that's why the stock is moving ahead of that. Otherwise, seemingly boring, some might argue, sitting down for an interview at yet another conference. There's so many of them, you can't attend every one, although we do try.
You guys do a great job. You guys fly around the country. We never even know where John is. I do know where he is today. He's in the South Beach area, call it or whatever, but it's another one of these big meetings. But anyway, let's jump on. Earlier, I had a tease out there, Mark, about shorts in the market and the squeezes that we have been seeing. And it has been prevalent for a very long time. We see it in the options all the time, where we see incredible amounts of options being bought in stocks that are being shorted because they're looking for that squeeze, that turn, anything that gives that stock a little bit of an extra lift. And is that happening today? Maybe it is in Cava. Now, this is the Mediterranean version of Chipotle for the people who don't know this name very well. It's not been a very public traded stock for a long period of time, so we don't really have a lot to go off of. It was much higher. It did pull back, but they've got incredible growth, Mark. They've got incredible growth when you look at their revenue. They've also got incredible growth in terms of how many stores they're trying to get open and get out there, and taking a lot from the model of what we've seen from Chipotle that's had unbelievable success, right? I mean, it's done an unbelievable job over a long period of time now. The CEO had to come in, really did save them, came from Taco Bell, did an amazing job. Well, Cava is taking everything they can from that and trying to repurpose it in a different way now with the Mediterranean side. It's really interesting. We're seeing a squeeze today. In my opinion, this is a stock that actually has the shorts of about 14% or thereabouts, Mark. So that's a fairly significant number. And once you start to get that little bit of a squeeze, it's up about 12%. This is one of those that could go up even a little bit more if the shorts get even a little bit more nervous. But that's the only news that I see out there right now for Cava, Mark.
Yeah, totally agree with all that, Pete. It's up almost 14% as we were just going on there. It is a classic short squeeze. I think, this is a company that went public not so long ago. It was one of the glimmers of hope, perhaps, for public markets and IPOs in 2024. That was a very successful IPO. And a lot of these shorts believing that once the lockup period, many insiders, when you are an officer, director, key employee, or even key shareholder, your shares are locked up. You can't sell them the day that the company goes public, something that's very frustrating sometimes for some of those folks. That lockup period for many of those shareholders, that expiration date has arrived, meaning they can start to sell shares into the market. And these shorts betting that those folks are going to be flooding the market with those shares. It's a classic short bet on a company that was gone public 6 months ago. That's the typical holding period. But, Pete, this thing is up massively, right? It's trading 48 and change times EBITDA. I don't see how they can sustain continued growth. I think they've already locked up a lot of the key brick and mortar locations that they were looking to lock up. I would not try to chase this thing into the short squeeze. I'd actually be looking to potentially short this thing myself at some point in time when the dust settles. I do not like – this is a massively overpriced stock in a segment, by the way, that is not benefiting from consumers trading down in their dining experiences, right? It's really going to be the fast food and the quick serve, not the Cavas of the world, that are going to benefit, in my opinion.
And speaking of food, Mark, how about this? Grocery Outlet. Now, not a name that everybody's probably very familiar with, but it's an interesting company. They've been building, but now the CFO, who's been there for over 11 years, is stepping away. Now, I guess the question all of us always will have, Mark, is, are you stepping away because you're nervous, or are you stepping away because you see some other opportunity out there? And none of us know that answer, right? I mean, it's just one of those things. But the stock is getting beat up today because people don't know the answer to that. And I think the answer is the guy probably just wants to expand to go somewhere else. But the reality is everybody's going to have a different interpretation of how they read this whole thing. Stock is under some serious pressure today. It's got a high short interest as well. The shorts have done very, very well in this name as it's gotten pressed to the downside. We are not seeing a squeeze. We are just seeing a continued move to the downside. What do you think of this one, Mark? Is there anything else that you see underneath the hood that tells you that you'd want to run away? Or maybe this is an opportunity now as the stock has gotten beat up just because they are losing somebody in the C-suite.
Yeah, well, I don't know the stock well enough, Pete, to make a suggestion as to whether or not it's time to pick up shares of this name. Anytime you've got a senior C-suite, that three wise men of the C-suite, right? Anytime one of those three departs, it's generally viewed poorly unless you've got a rock star that comes in to replace them. I don't read a lot in the tea leaves of this statement from the company. Left to pursue other opportunities. That's typically an honest statement. If there was any indication of some problems in terms of the financials that were prepared by this executive, the company would have an obligation to make a filing to report that. So I don't think there's a lot of there from what I can see right now, but I don't know that I would suggest anybody looking to pick this thing up on this downward pressure.
Right. Yep. Very interesting stuff. We had some fun stocks there. Now we're going to have a little bit of fun with some sports, Mark. And I know you love this segment. So we're going to hit a little bit of sports. Now, yesterday we were talking about any given Sunday because the games on Sunday were absolutely extraordinary. So many different results than people expected going into Sunday. And I think that's what made it any given Sunday, because in the National Football League, I'll tell you, there is far more parity than I've ever seen. There are teams that are somewhere in the 500 level that actually probably should have better records, and some that maybe should have worse records. But the reality is we are seeing a lot of parity, a lot of interesting things. So I'm going to give you an any given Monday, and that's Monday Night Football last night. And that's the Miami Dolphins playing against Tennessee. Now, going into that game, the Dolphins are the obvious pick, right? They're 9-3. They look fantastic. They've got Tyreek Hill. He's unbelievable. Everybody's excited about things. But then all of a sudden you've got this Tennessee team where you've got a quarterback who seems to be getting a little bit better each and every week. He was playing college football last year. He got passed away in the first round. Everybody had to watch him sitting with his girlfriend during the draft. He never got drafted in the first round. He eventually goes to Tennessee later on, right? Well, he's doing pretty well. Will Levis is his name. And in the end of the game last night, they scored 15 points in the final 5 minutes. Now, that's not something that NFL teams see happen all that frequently. No. You might, in the fourth quarter, you start getting a few points, you do this and that. But in that short period of time, they beat the Dolphins. And it was a very, very fun game. It was an interesting game. But here's the other thing. Tyreek Hill got hurt during the game, right? And he seems to be what Miami feeds off of. It's not Tua. It's Tyreek Hill. And he is the Thrill Hill, as he's known. He's unbelievable. He's got the speed. But here's the funny part, Mark, and I think this is something that you and I would both appreciate. He was on the bench because he got hurt. He grabs his cell phone, which is interesting to me, grabs his cell phone, and he's texting back and forth with his wife. Now, his wife actually sent a text that he read later that said, "You better get your ass back in the game, dog." So it shows you that she has a pretty good feel for what's right and what's wrong. He got back in the game. He started playing again, even though the team was sort of like, "Hey, man, we need you you're hurt. You need to be on here." He got back in the game. It didn't really make a big change because he did get hurt. He had a fairly major. But what do you think about players actually texting and going back and forth with family members from the bench during the game? What do you think of that whole thing?
Listen, that could be a dangerous thing, texting, wives, girlfriends, hopefully not both. That can be even more of a problem in terms of their mental state. But there was one celebrity that was live in the audience at that game last night, Pete, and he shares your last name. So I don't know if Miami fans want to tribute the Dolphins' misfortune to the presence of the less attractive Najarian in the stands with 40 other VIPs. But you got to question it. You got to question what led to such terrible bad luck for the Dolphins last night. And Tennessee's performance in the final minutes of the game, truly outstanding, must-watch football.
Yeah, and I like that Will Levis. I liked him last year. I thought he should have gone higher than he did. Everybody passed him up. You never know, Mark. But John and I were talking about this the other day about, sometimes the owners get a little too close to things. And suddenly, a guy like Tepper decides, "Hey, look, I want to get Bryce Young. I'll give anything to get this player." That has not worked out, number one. And number two, now going into next year, they're short on draft picks. So, so they can't just fix this thing right away. It's going to take some time. And it's always interesting to see, how the egos get in the way sometimes, because I'm not so sure a lot of the owners really know football football other than the financial side of football and the great TV contracts and everything else that comes along with it. So
I'd love to know if anybody tracks that, Pete. That would be a really interesting indicator, like the involvement in football operations of ownership on a relative basis and how that impacts the team's performance. That would be a fascinating thing to look at.
In any sport, NBA, baseball, football, whatever. I agree with you. I think it'd be fun. Speaking of which, I just said baseball. Okay, Shohei Ohtani. Is this guy just unbelievable? We talked about him for a long time, Mark, about what he would get. And, I think I got pretty daggone close because I was adding up, all right, as a batter, he should get this much, $400 million. As a pitcher, he should get this much, about $300 million. Comes up to $700 million. And what has he got? He's got a $700 million contract, this guy. But the beauty of it is this, and this is where you and I as financial guys really get kind of excited. This guy has some great folks that are repping him right now because they have him doing everything right. Mark, he's going to get $2 million a year from his contract while he's playing. Then he gets paid off from 2034 to 2043 with the balance of it. This is all being deferred. Now, against the salary cap, which isn't really a cap, it's a tax, but we'll call it a cap. It's $46 million rather than $70 million. $70 million of the $700 for a 10-year contract. It's amazing what they've been able to do. And if he does things right, Mark, from a tax perspective, when he's done, let's say, with this contract and he decides to live somewhere else, that's where the tax dollars go. This contract gets better and better and better. And oh, by the way, he's got a lot of sponsors. And that's something he can live off as well. So not only has he got the $2 million from them per year, but he's also somewhere in that $30 to $50 million from a sponsor. I think he'll be just fine. I don't know where he's going to end up living, call it in 2035, 2040. But wherever it is, I would bet you that it's going to have some influence from taxes. But I love when I see this because this is a smart contract. And I think he did things right. I think the team did things right. And this guy was on the Angels. Here he is now on the Dodgers. So this was an angelic transaction that we're going through right now with this. He ain't going to pitch this year, though. He's only going to be able to bat.
Fascinating, Pete. You got to think that there's significant financial disincentive for high-earning players to come to a team in California, in any of the major league sports. So some pretty elegant financial engineering here. Question for you, though, on Ohtani and how all this went down. Why do you think our friend Steve Cohen and the Mets didn't make a play for who is arguably the greatest player in baseball right now?
It's a great question. I think that there are small red flags, not for me, but for some people, Mark. I think that they look at it and they say, $700 million for a guy who's got Tommy John, he's got this, he's got that. You're worried about his arm probably in the future. You can understand it. Here would be my side that I'd argue against that, though. This guy will put fans in the stands. Now, the Dodgers have no problem with that already. But you know what? They can raise the prices. they can do a lot of things, right? And then and how about the sponsors for the team? They already have a very big exposure from the Japanese side, and that could only potentially get bigger. So there's a lot of reasons why I think it makes sense that you'd want to have him as a player on your team. I just wonder if Stevie Cohen just said, I don't want to have to go there. And I don't think that it's going to do the same kind of a thing here in New York. But I'll tell you, I don't even think he will pitch again, in my opinion. I think that's just like Aaron Rodgers. They're doing amazing things in surgery these days. And guys that are getting Achilles that used to be the death nail for a player, they come back from them. Look at Aaron Rodgers right now. If the team had any chance at all, I think he'd actually be on the field. Hell, he might still get on the field. Who knows? I mean, he keeps talking about it. He goes on Pat McAfee all the time. He talks about this stuff and all the miracles that are going into what he's dealing with right now. But, I think sometimes these owners do get a little bit nervous over that, and understandably so. But I think this guy, Ohtani, brings us so much more. He will put fans in the stands in every place that he goes, and it's going to be great for baseball.
Agreed.
Yeah. Well, thanks a lot, Mark. I always appreciate you, man. This is the Rebels Edge. We have a lot of fun. We talk about stuff that's macro. We talk about the stocks. We talk about a little bit of sports. It's all fun, and we'll do it again tomorrow at 1 p.m. Eastern Time. We'll see you then.